Muathe@muathe.com. So what I'm going to do in this video is take a look at the three sectors. Keep in mind here, just a reminder, we've been talking about owning and spending a lot of time looking for the best stocks within the leadership sectors. And of course here we're taking a look at the Indian market by way of the National Stock Exchange. So I know you've taken a look at these lists here, or the top leadership sectors. Just want to take a look here, and just so that we can have this on the video, the website that I am using is right there for those who have an interest. Somebody at some point is going to ask what website was this down the road, but that's the website right there. And in this video I want to talk about the kind of work we have to do to make sure that we own the best and the leadership sectors in the market. Keep in mind this list is always going to change over weeks and over months. It doesn't change every day, but over time it's going to change as market leadership changes. Now what I've done is, like I said, I only took a look at these three sectors here: sugar, retail, and logistics. And just so we can have this on the list, the sugar list is a little bit longer, but these were the stocks that pulled up. So I took a look at all these stocks one by one. Now I'm sure you can use software or other means to narrow down the list. I was using a manual process. I prefer using a manual process myself just because it gives me a sense of what the general market is doing. It's always good to have a sense of what the general market is doing, because ultimately stocks move in the direction of the general market. And then I took a look at logistics. Just going to have this here on the list so we can have the stocks that I looked at on an individual basis. So I took a look at those three sectors. Let's take a look at what I concluded would be the ones that one can follow. Of course the list is a little bit longer. It's a long list. If you take a look at the 10 sectors that are leading the market right now, you'd have to go through all this list to find the ones that are timely. And the takeaway in this video, if there's something you can take away, is it's a non-ending job, because you might find a stock that has already moved, but just because it's moved doesn't mean that you give up on it. It might pull back and at some point break out again above the current or the future monthly closing high. So you want to track all these stocks, because at some point there could be another breakout, and some of them have yet to break out, so we have to follow them and set alerts for them. So takeaway here is this pruning, adding to your watch list, reducing to your watch list, all these things, you add, you prune, you set alerts, you do all these things, and it's a non-ending job, because the market is so dynamic, so volatile, things change all the time. You can't just sit there and scan the stocks one time and that's it. Now when you're looking at sectors, you don't have to look at this every day. It's not a daily thing. It could be once a week, sometimes even once every 2 weeks. That's fine, because these top sectors don't move as much, so you can track them maybe weekly or every 2 weeks. But the key is you want to spend your time looking at the best stocks within the best sectors, because they tend to be the ones that continuously produce the results that we are seeking. So let's go back to what I was trying to say here. I took a look at the top three as an example, and I took a look at all these stocks, and let me show you what I came up with. And out of that group, the ones that I came across that looked like they are worth tracking, this is the list right here. What we're going to do is take a look at all these stocks from an individual basis. So let's do that. So let's begin with this one here. And what we see here, it meets the minimum requirement. Keep in mind the minimum requirement, of course, is the ultimate Muathe breakout minimum requirements. And you can see that the RSI is exactly where we need it to be. So it's worth tracking. MACDs are trading exactly where I would like them to be, at 3-year highs. Remember, we only need one of the MACDs to be trading at 3-year highs. Here we have both MACDs. RSI meets the minimum requirement. So the stock has already broken out, depending on where if you use this let's say you use this monthly closing high, because at the time it is breaking out here, it already met the minimum requirements because the RSI was already breaking out, and we saw that the MACD is already breaking out. So the ideal entry point was somewhere here. And also, let's say you wanted to play this breakout because it still met the minimum requirement. It's already extended past that buy point based on this monthly closing high. So what we can do here is track this on a weekly basis. When we take a look at the same stock from a weekly basis, we can see that it has had 2 weeks of rest, or at least the minimum required 2 weeks of rest. Now any breakout above the recent weekly closing high would be the place to go long or to buy the breakout. So on a stock like this one, you don't give up on it. You set an alert. The alert should be at about 60, let's call it about 61. So you find out what the precise weekly closing high there is and go ahead and set an alert on your watch list. If the stock moves above this buy point, then that means that it is one that somebody can own. So in terms of timeliness, I would set an alert there at about 61 and see whether it breaks out. If it doesn't, break out and trigger your alert, you just ignore. So that's one of the things. This is the manual process that we have to go through. This is one idea here. Set an alert, see what happens. Take a look at the next one on our monthly list. Now keep in mind, when I'm scanning for these things, the first thing I look at is the 3-year monthly. And if your charts allow you, you can do 34 months. It's a little adjustment, so you can go 3 years or 36 months. This is what I scan for. That's my default scan parameter. If your charts allow you, you can go 34 months. Now you take a look at this one here. The stock looks good. You can see it meets the minimum requirement. MACD is trading at 3-year highs. We need one of the MACDs to do that, so that's a minimum requirement there. And we need the RSI either to be at 3-year highs or above 69.1. We can see it is trading above 69.1. So it meets the minimum requirement. And what we can do here, because the stock already broke out, is we can either watch this for a pullback. We need 1 month of rest for this to be considered a breakout. So if it closes down this month and breaks out any month after 1 month of rest, you can set an alert at about 153. Figure out what the precise monthly closing high was. After 1 down month, if it breaks out, that's what you need as your breakout level. Keep in mind, and as an example here, we can see 1 month of rest and a breakout. So that was the buy point here. Again, we got 1 month of rest here and a breakout. You need at least 1 month of rest before a strong move can continue. So those are the examples. That's why we need at least 1 month of rest to give the stock time to have digested the previous gains and to have, let's frankly call it what it is. You need your stock to rest before the next continued move. So you're either going to get 1 month of rest here. Otherwise, if the stock breaks out, you also need to check the weekly. So now let's check the weekly. This is the 2-year weekly, and you can see that you can set this an alert at the current recent weekly closing high. Let's call that at about 158 maybe. So figure out what the precise buy point is, this recent weekly closing high. And if the stock breaks out above that price, you know that it might be continuing to move higher, and that's what you want. And just to give you a visual look of what we are looking for, here we have the 2 weeks of rest. Keep in mind, let me just remind you that on the monthly chart, you need 1 month of rest. For the weekly charts, for the daily charts, and the hourly charts, you need at least 2 periods of rest. In other words, for the weekly chart, you need 2 weeks of rest. For the daily chart, you need 2 days of rest. For the hourly chart, you need 2 hours of rest after recording a recent high As an example, let's go here. We can see that the stock was breaking out here. It had more than 2 weeks of rest, in fact 2 weeks of rest, and it breaks out. So that's a legitimate breakout. Another example here, after 2 weeks of rest minimum, in fact there was multiple weeks there, maybe about 8 I would guesstimate, that's a legitimate breakout. And again here you have more than 2 weeks of rest. 2 weeks is the minimum on a weekly chart, so this was an entry level here. So the idea here is you set an alert. If it breaks out, then that's when you know that you need to give this more attention. Maybe you can consider making an entry into that position. Let's take a look at the other here, and there's so many. For example, this one here would just need to move above this recent monthly closing high. So you set an alert. As of right now, there's a failed breakout here, failed breakout on this month. It hasn't closed above this recent monthly closing high. You need the stock to close above that monthly closing high. So what you do, you set an alert and forget about it. If this alert is triggered, then it should give you a reason to go and take a look at the stock. Otherwise, if the alert is not triggered, you can ignore. And also take a look at the technicals. You can see that if the price breaks out, then the RSI would be moving above 69.1. That's our minimum requirement. And the MACDs would also be moving to 3-year highs, or at least one of the MACDs, and that would fulfill our minimum requirements. So you can track a stock like this one simply by setting an alert and see whether the alert is going to be triggered down the road. Let's take a look at another from the list, and here's one, and here is a good example of a breakout. You can set an alert at about 190, because if the stock breaks out, you can see the RSI is still holding above 69.1. We can take a look at the MACDs. The MACDs, we have one of the MACDs already trading at 3-year highs. So you got your minimum requirements here. MACDs at 3-year highs, RSI at above 69.1. What you do here is very simple. You set an alert at this recent monthly closing high. If it moves above that monthly closing high, then it's time to consider going long. Why? Because this is one of the stocks within the best performing sectors in the market. You want to play such breakouts because they could be due for another major run. Now what I'm going to do is use this very chart to show you why we are looking at the minimum requirements. Let's take a look here. Let's go and take a look at the monthly chart and let's go back about 5 years, so we have the data we need to understand why the stock did well recently. So why do we look for the minimum requirements we look for, or the ultimate Muathe breakout? It's very simple, because that's deadly timing strategy. If you take this monthly closing high here in 2015, if you use that as your entry, that coincided with a breakout in the RSI. So we're talking about this breakout here, this time period. RSI moves to all-time highs. That's a 3-year move, or all-time highs. We see that the MACDs also move to 3-year highs. And we can see here the default MACD also moves to 3-year highs. That was why the price breakout, RSI breakout, MACD breakouts, the ultimate Muathe minimum requirements were met, and because of that, you get a chance to own a stock after the breakout here. So that entry here, you have a chance of owning part of this move from about, let's call it lower 20s to the highs, even here, or you take these highs, or even these highs, or even these highs. You still had a chance to more than double, triple your money if you take the high here. Okay. Also, let's not forget that you could have also decided to use, let's say you caught the move a little bit late. This higher high, or the closing high on a monthly basis in 2014, gave you a chance to enter here. Even at that entry level, you still have your RSI moving to 3-year highs, RSI jumping above 61.8 for the first time in more than 3 years. You got RSI also moving above 69.1 for the first time in more than 3 years. So we're talking about this move above 61.8, this move here above 69.1. In other words, before the stock blasted higher, it met the minimum requirements. That's why we are continuously looking for stocks with the same look, the same minimum requirements. Here we can see that there was a breakout on hindsight. Here, that breakout was successful. There's another breakout here after 2 months of rest. That breakout was also successful. We can see recently there was a breakout here. That breakout has been successful. Now keep in mind the stock breaks out, comes back and tests this breakout level and starts moving higher. Now what we can do is set an alert there. If it breaks out, you can take up a position, ask questions later. So here's a perfect example why we always looking for the minimum requirements we look for, because it gives you an opportunity and a chance to be part of such a strong move. As you can see here, strong move because the stock met the minimum requirements. Now that's the monthly chart, and you can set an alert as we said at about 190. Now remember, this is manual process of pruning, adjusting your buy points, checking them after a couple weeks, couple days to see whether you need to adjust anything. For example, here you can take a look at the same stock but on a weekly chart. You can use the recent weekly closing high also as a future buy point. Now that would be at about 194. But of course, you'd rather be buying the stock if it breaks out on this lower entry point on the monthly at about 190. So what we are using here is the monthly closing high, recent monthly closing high as our entry. And I'm also saying that let's say you miss the monthly closing high, then the weekly closing high at about 194 would be the next buy point if you miss the monthly buy point. So let's take a look at the rest of the stocks here. And again, for example, this one here, you can see that there's no monthly buy point. It already broke out on the monthly chart. So we might be forced to take a look at the weekly chart to see what we get. So the monthly breakout already took place. And what we can do is take a look at the weekly chart to see whether we need to set an alert. And here on the weekly, we can see that there's a recent weekly closing high just under 290. So you can set that alert, get the precise buy point by finding out the precise weekly closing high on this week here and set an alert. If the stock were to break out above that weekly buy point or that recent weekly closing high, any breakout above that is when you'd want to go long to be part of any weekly breakout. That would be similar to owning the stock during this breakout here as an example, or let's say as a visual example of what we are trying to do is by timing a weekly breakout. Let's move on here, and I'm just gonna go. So here is one that has moved, and take a look at this move here. Recently we discussed with you on the phone here when we were talking about how long a stock can stay above 69.1. Here's an example, a breakout. In fact, you know what we can do? It would probably make more sense if we make sure that it meets the minimum requirement. The more we understand that this is what moves stocks, the more we know what we are looking for. So let's do that. So we can even take this monthly closing high here, set an alert there. Once it breaks out here, take a look at what the technicals look like, and of course the technicals met the minimum requirements. The stock was also moving above 61.8 and also jumped above 69.1. So you got 61.8 for the first time in 3 years. That helps. You got also subsequently moves above 69.1, but the key here is that it moved the RSI to 3-year highs. So that's the big takeaway. So this move here, it moved the RSI to 3-year highs. That's what we want. Also moves the MACDs to 3-year highs. So that it met the minimum requirements. And again, to make sure this is the period, this monthly breakout right there, you can see it meets all the requirements. MACDs at 3-year highs, maybe more than 3-year highs, RSI at 3-year highs. And so as we can see, that's why we have this explosive move. We're talking about after the breakout, an entry here of about, I would say about in the 30s. Stock has a chance of taking a pause here before going down for 1 month. Any future breakout is legit. So after 1 month of rest, it breaks out. Here we see it rests. After resting for about 2 months, it continues on its journey with a fresh breakout. Here we can see it rested for, let's say, 1, 2, 3 months, breaks out on month number 4, which is this entry right there. And like I was saying, don't forget that stocks can stay above 69.1 for a long time. Here we move above 69.1 sometime in, I believe, October of 2015, and we are trading in March 2017. The RSI continues to hold above 69.1. So the key is to stay in the stock as long as it is holding above 69.1. Why? Because this is what happens when a stock is holding above 69.1. You tend to get this continued move after periods of rest, fresh breakouts, and a movement higher, as long as the RSI is holding above 69.1. So let's go back to our 3-year monthly on the same stock. We can see we don't see any buy point here. The stock has not rested over the last couple of months. It's been positive 1, 2, 3, 4, 5, about 6 straight months to the upside. What we can do is take a look at the weekly, and from the weekly we can see the weekly is now staging a fresh breakout. So if you don't find a monthly buy point, you can take a look at the weekly chart. Here we can see the weekly chart is recently doing its best to break out. The buy point is just under 450. I would say that is still within our 5% buy point window. Keep in mind, once we figure out what the buy point is, let's call it X, we know that our window or range of where we can consider it within reasonable range is a 5% above the buy point. So 5% above the buy point gives us some room to enter the stock without feeling like we are chasing it. So it is still within 5% of the recent weekly closing high. So let's say you are looking for a leadership stock that was breaking out and is timely. This one is definitely timely since it is breaking out and is within your 5% window. Let's take a look at the next one on the list here. Let's go back here, and we can see that here's another one that needs to break out. And you can actually even use this recent monthly closing high as your alert price range to watch, just under 140. Or you can go and take a look at the weekly chart. Let's do that. And on the weekly chart, you can definitely see that it needs to break out above this buy point here at about 160, 150, let's call it 57 maybe. So find out what the precise price level is. You can use that as a future breakout. If the stock were to break out, of course, you want to take a look and see whether it is time to buy the stock with a breakout. Keep in mind, it's a stock within a leadership sector. So any breakout of a stock within a leadership sector does mean that we need to pay attention. And we can see that it meets the minimum requirements on the monthly chart. Remember, always make sure that before we even consider a stock, that it meets the minimum requirements on our monthly chart. So that is pretty much why we go through all this process. We are finding stocks that meet the ultimate Muathe breakout with the RSI and MACDs doing exactly what we want them to do. Here we can see that the MACDs and the RSIs meet the minimum requirements because the RSI is holding above 69.1. One of the MACDs is trading at 3-year highs. Hence, we can take a look and find an entry point. And like I was saying, you can either use this recent monthly closing high as a breakout level to watch, or you can use the current weekly breakout level as your next entry level, and also as your level to watch to set an alert. So let's move on to the next candidate that I shortlisted, and here you can see on this one, all you have to do is just set an alert here for a breakout. If it breaks out, then you want to check and see whether the RSI is breaking out or if the MACDs meet the minimum requirement. So you can set the alert, and when the alert is triggered, take a look at the RSI and the MACDs to see whether at the point of breakout they meet the minimum requirement. Let's take a look at the next one here. You can see this stock is trying to pull back. RSIs and MACDs are exactly where they need to be. So what we can do here is either wait to see whether it breaks out after 1 month of rest. So you can use the 270 price range, which is the recent, around that level is where it closed at the end of last month. Let's say it closes lower this month. Any future breakout after 1 month of rest is where you want to go long. As an example here, we had 1 month of rest and then it breaks out. On hindsight, that breakout was successful. That was where one could have gone long for a swing trade to the upside. Otherwise, you can always use the recent weekly closing high as your next buy point also, just in case the stock is not ready to pull back this month. So you can use this recent weekly closing high as your next buy point. So you can set your alerts either by considering the recent monthly closing high. That's one option. Or you can use the recent weekly closing high. All right. Or you can use both. You can use either this or both of them. And what I'm saying here is, what you could do also is, let's say you decide I'm gonna buy 50% of my position when it breaks out on the monthly chart, and then I'll add the next 50% of what I wanted to be the full holding position when it moves above the weekly price. Either way works. Or you can start buying when it moves above the monthly buy point. The monthly buy point tends to be more often than not the earlier buy point. So I would say go with the monthly buy point as best as you can. All right, let's go to our charts here. And I'll just go through. Here is one that doesn't look great. It's not the best looking one, but I put this one here because it won't take much for the RSIs to be moving to 3-year highs. So you can see here, needs some work. MACD is not far off. One of the MACDs is trading at 3-year highs. So in a situation like this, where we have possibility that down the road it could form the minimum requirements, you just watch it. And you can set an alert, figure out where you want to set an alert. It could be this buy point, where you can use the recent monthly closing high, just in case at that point RSI would be meeting the minimum requirement. So here's one that you can just set an alert, see whether it ever breaks out down the road. Take a look at one more here, a couple more I guess. And here's one that meets the minimum requirement. You can see RSIs and MACDs are exactly where they need to be. You got your MACDs at 3-year highs. That's good. And you got your RSI trading above 69.1. And again, this is a 3-year monthly. So this one meets the minimum requirement. What you can do is actually just, since we have no buy point, the buy point was here, the stock is more than 5% from your monthly buy point, you can figure out what the weekly buy point is. And if you take a look at the weekly chart, you can see that this is one that is very, very timely right now, trying to break out above that recent month weekly closing high. Again, this is a weekly chart. It's a 2-year weekly chart. Whoops. Weekly. And you can use this recent weekly closing high as your buy point. Right now the stock is trying to break out. So in terms of timeliness, this is one that I would be looking at because it is breaking out on the weekly chart as of right now. It needs to hold above that recent weekly closing high. And again, let me show that weekly closing high goes back to somewhere here. So as long as it stays above that weekly closing high, and given that the monthly chart meets the minimum requirement, that's a very timely candidate. Take a look at the couple stocks here. Here's one that's breaking out this month after 1 month of rest, slightly above our 5% window. Now remember that 5% window is only for guidance. It doesn't mean that you can't buy a stock that is up 7% above the buy point. This is just for guidance so we don't chase. Keep in mind, let's say, the reason why I say that is if a stock is gonna go up, let's say 300%, and the buy point was at 100, really, why would you care if you bought it at, let's say, 10% above 100? That would be buying it at 110. If it's gonna go up to 300%, it's gonna be trading in the 400s. So what I'm trying to say here is the 5% window is only for guidance. It's not a hard and fast rule. So here we have an entry. It's more than 5% from your monthly buy point. What you can do is take a look at the weekly, see whether the weekly gives you any opportunity. And here we can see the RSI trading at close to 3-year highs, very close, but the key is it is trading above 69.1, which is what we want, and the one of the MACDs is trading at 3-year highs, which is also what we are looking for. So what we can do is take a look at the weekly for precisely to see whether we can get the next weekly buy point, since the monthly chart already broke out. And now if we take a look at the weekly, we can see that the weekly is very timely. This is a recent weekly closing high at about, let's say, maybe 70, 77, 78. The stock is within that range. So that's definitely within the 5% window. It meets the minimum requirement on the monthly chart. Definitely one that is very timely. So this here is another one from the leadership sector that is very timely. You'd want it to break out and stay above that buy point. Now, one thing I need to point out here is, let's say it breaks out but fails, moves back below that buy point. If it fails to hold above the buy point, it is time to start trimming your position. The last thing you want to do is hold on to a failed breakout. Failed breakouts just tend to be notorious for taking stocks lower. So once it breaks out, the strategy is to insist that if you're going to own it, it stays above your buy point. So that's the key. It needs to stay above the buy point. Otherwise, it could be one that fails. After a failed breakout, you never know whether the next swing trade is down or not. So you'd rather set an alert or start trimming your position if the stock moves back below your predetermined entry price level. So here's one that is definitely timely from the list of stocks that we are looking at. Let's go back and take a look at the remainder of the list here. So we can see one here that I would track this one, because at some point the RSI is gonna go back above 69.1 here, and that would also trigger a breakout maybe at this level. So you can set an alert. Yes, it's very far away from breaking out, but what's wrong with setting an alert and see what happens? Maybe you buy this in the next 6 months, maybe 1 year, who knows. It's a good example here that we see what happens to stocks when they move above 69.1. This breakout here above 69.1 begins this explosive run from 75. The stock stays above 69.1 until it moves back below this level here, which is this period. So 75 entry. When it moves above 69.1, you get out of that position somewhere here at about 375. So by just observing the level above 69.1, you get a chance of owning a stock from 75 all the way to exit somewhere here. Right, that's a good example here. In fact, what we can do here is, I always like to keep reminding us why we do this. Let's take a look at the 5-year monthly chart so we can have all the data we need. And what I'm going to do here is I'm going to show you the ideal entry levels. If we can get the price and the MACDs. Okay, here we go. So we got two levels that I can see here. There is a breakout here, breakout number 1. There's breakout number 2 here after 1 month of rest. Breakout number 1 is this month here, that's the time. Breakout number 2 is this monthly period here. So what we're going to do is take a look at the minimum requirements. During the first breakout, we can clearly see that the RSI moves to 3-year highs. During the first breakout, we can see that clearly the MACD, or one of the MACDs, was moving at 3-year highs. And also we can see that the default or the main MACD was also moving to 3-year highs. So the minimum requirements were met during the first breakout. No question about that. During the second breakout, we can see that the RSI moves to 3-year highs here. During this breakout here, the second breakout, RSI also jumps above 69.1 as we observed. We can see that the MACD also jumps to 3-year highs here. And also the default and the main MACD jumps to 3-year highs. So even though we need only one of the MACDs to be moving to 3-year highs, we see here that both MACDs on each of these two breakouts break out to 3-year highs. In other words, the breakouts were very strong, and of course the RSIs met the minimum requirement. I need to point out here that the RSI broke out to 3-year highs here and also moved above 61.8. When stocks break out and move above 61.8, there tends to be an added oomph or power behind it. Take a look at what happens. The stock ultimately, so let me do that again. So this breakout here, if we extend that same line, we see that this also became, so it was a breakout level here. This also became support during this buy point. The same line becomes support during the lows here. Oops, it's the lows right there. Let's change that a little bit. Yeah, right there. Those lows, and the stock bounces after that and hasn't looked back since. So definitely by just using the principles we look at in terms of support and breakout, you can see a lot of the things we look at are really consistent across many markets and across many sectors. Now here's another that was recently broken out on the monthly. It's more than 5%, well above the 5% buy point window. We don't want to be chasing this. We take a look at the MACDs and the RSIs. They meet the minimum requirements. MACDs at 3-year highs here. RSI above 69.1 here. So it meets the minimum requirement. The only thing we're waiting for here is 1 month of rest. So you can track this month to month. At some point it pulls back for 1 month and maybe more than 1 month, but the minimum 1 month of rest is required before a future breakout. As an example here, we can see there was 2 months of rest. So what you do with a stock like this, when remember we are trying to track leadership sectors, is even though it doesn't give you an entry on the monthly, it doesn't mean that you throw it away. What you can do is put this on a watch list, and every month you can wait to see whether it gives you an entry level. Alternatively, we can go to our weekly buy point. We know that the stock meets the minimum requirements in terms of the monthly chart. Let's take a look at the weekly chart. Take a look at the weekly, we can see it's within the buy point where we would say is reasonable. The buy point here is a recent weekly closing high of about, let's call it 97. So the stock is trading within that 5% window approximately. So this is a timely entry. If you are looking for an idea to play in the market, this is a leadership sector. This is within buy point range. If it can hold above the recent weekly closing high at about 97, then this one is one you can consider timely. Buying this based on the current monthly chart and based on the current weekly chart is consistent with what we are looking for. So all this looking and pruning and adding stocks, sometimes you find stocks that are timely, and this one is timely. So instead of spending more days and more hours looking for another idea, this one gives you what you're looking for. It's within the best sectors in the market. The monthly chart meets the minimum requirements, and the MACD gives you a timely entry. So what do? You buy the stock, knowing that if it ever moves below the $97 price range, or whatever the precise buy point is, which is this closing high on a weekly basis, whatever that weekly closing high is our buy point. If the stock drops below that buy point range, you want to close that position because it could be a failed breakout. We don't want to own failed breakouts because failed breakouts are notorious for killing markets. Let's take a look at the last stock on the list. And here we can see one that has actually been drifting lower, something different from what we've been seeing, but it gives us an opportunity to own a stock that could break out. Now you can see here the stock IPO'd or started trading in 2015 from what I can tell. It's been drifting lower, but take a look at the RSI. The RSI is setting up now to break out to 3-year highs. If the RSI can break out to 3-year highs, that would be very timely. So a breakout here is what we need. We'd need one of the MACDs to be moving to 3-year highs, and we can see that the default MACD is just now printing and is already pointing to all-time highs. So I would watch a stock like this for a breakout. You can set the recent weekly closing high, let's say here, for a future entry, or you can use the weekly chart. Let's do that. And on the weekly chart, we can see that we can actually even use this recent weekly closing high, or we can use this recent weekly closing high. If it breaks out above any of these price levels on a weekly chart, that might suggest that the monthly chart is now confirming breakout status. So the best thing to do is to use this most recent weekly closing high, because it gives you a better entry level, and that is just below 310. So you set an alert at 310, set an additional alert at, let's say, 320. Either of these breakouts would be legit. Of course, you want to go with the earliest entry level because it gives you a lower entry price. If it breaks out above either of these two, then the monthly chart would be confirming that it is moving the RSI to 3-year highs. The RSI would be breaking out to 3-year highs. The RSI would be breaking out to all-time highs. One of the MACDs is already trading at all-time highs. So this is the type of consideration you have to do. So because the weekly chart is not giving us an entry until somewhere here at 360, we can use the weekly chart. So the monthly chart is giving us a very high buy point consideration here at about 360. What we can do is use the recent weekly closing highs as I just discussed. A breakout above the recent weekly closing high at about 309, somewhere there, or you can use this next buy point, the next most recent weekly closing high. A breakout above any of these two prices is legit because it would be confirming our monthly chart breaking out. Why would we do that? Keep in mind, the reason is we want to own the best stocks within the best leadership sectors. It's a lengthy video, but all this is just trying to refine the idea that selecting stocks, finding buy points is a lot of work. It's never non-ending work. It's always adding, deleting, pruning, checking again to see whether there's a rest period. So it's a continual job you have to do. I don't think there's a way of escaping this because stocks will go up, rest, break out again, go down, break out in the future, and you are all continuously asked to look for these buy points. All these breakout levels need adjustment. So you can't just check the scan once and don't look at it again. You have to scan for stocks as you go along because market conditions change. For example, here we can see if you set an alert here as an example, the stock never broke out. So that's no reason to buy it. If you set an alert based on this buy point, it never breaks out. So what I'm trying to say here is sometimes setting the breakout level for example, if this was the entry level, once it broke out here, you had a reason for an interest in the stock. And I'm sure at the time either the weekly chart was fully developed or the daily chart was fully developed to give you an entry level here. In fact, let's do that. Let's take a look at this from a weekly chart. So the weekly chart was not fully developed during this breakout here. So as an IPO, we can see that we did not have fully developed, no RSI at the time. The MACD was breaking out. Since we don't have fully developed weekly chart, let's take a look at the daily at that time period. All right, and so we're talking about this breakout here. Now we have fully developed RSIs and MACDs on the daily, so we can use that. So for an IPO, you want to use the time frame that is fully developed, and we can see here that our RSI was moving to all-time highs on the daily, and at least one of the MACDs was also breaking out to all-time highs. In fact, let's take a look at both MACDs here. So we're talking about this time period here, and the daily RSI was breaking out to all-time highs, and we can see that the default MACD and the other MACD were at 3-year highs. What I'm trying to say here is, for an IPO, what you do is use the same principles for the ultimate Muathe breakout, but you want to make sure that if the monthly RSI and MACDs are not fully developed, you go to the next time frame, which is the weekly. If the weekly chart indicators are not fully developed, the RSI and the MACDs are not fully developed, and then you go to the daily. If the daily chart is not fully developed, but it is breaking out, then you go to the hourly charts where you check, again, you check the MACDs and you check the RSI. Here we find that the daily chart was fully developed during the breakout, and the daily chart met the minimum requirements, the same minimum requirements for the ultimate Muathe breakout. So let's go back to our monthly chart on this one, and again we can use the weekly chart as the next buy point, because a breakout on the weekly chart confirms that the RSI and the MACDs will be trading at 3-year highs, all-time highs, which is what we are looking for. I'll end the video there. It's a lengthy one, but it's an important one, because what I wanted to explain here and emphasize is the idea that this pruning, adding, deleting, checking again is a continual process. The stock could break out, take a break. Just because it takes a break doesn't mean that you don't follow it. You follow it because the next breakout could be the one that truly has the best move. Eric Muathe, Muathe.com. By the way, before I forget, here on the daily, the breakout was taking place here. You can see that this was a clearly defined 1 month of rest. So while the stock is breaking out as an IPO here, what we did is we checked the weekly chart. Weekly chart was not fully developed, so we went to the next time frame, which was the daily. The daily had fully developed RSI and MACD. So even though the monthly chart was not fully developed during this breakout, we go and check the other time frames, and we see that during this breakout we got minimum requirements met, and so you had a chance of owning this stock here at about 300 before it goes to the highs of about 480. Eric Muathe, Muathe.com. As always, good luck, peace, and blessings. E-A-C-S. Woo!